Hello, welcome to the replay. I'm Jason Butler. Thanks for joining me on tonight's session. It's all going to be about how to make your first million. Let's just post that. Let's pin it. Good stuff. Right, well, hello. Thanks for joining me. So, how to make your first million. That's what we're going to be talking about today. Should be good fun. It's interesting, we got a hell of a lot of people on the countdown clock on this particular subject, so great to see some new friends, some old friends. Let's just have a look, because I have to put my glasses on. Let's just have a look. Good to see everyone joining, good stuff. Just got to get this on, just have to put this on an iPad so I can actually see it. Good stuff. Good to see everyone. Who have we got here? Let's have a look, who have we got here? Yep. Oh, Tennis for Teddington, he's back, or she's back. Yeah, great to see you. Let's get this work. Hello, nice to see you. Good stuff. Yeah, good stuff. All right, so anyway, let's crack on. I want you to now imagine that you've just won £10 million on the lottery. £10 million. Now, I want you to just really let it soak in for a minute. I want you to really think, how do you feel? Just let it all soak in. So, if you believe and you're feeling frightened, worried, concerned, give me a face with some tears. If you feel that you would be ecstatic, give me a face with some hands, or a big smile. Either, I don't mind. Because I want to get a sense for how you guys are feeling, how you would feel if you actually had that amount of money. Because one of the things about achieving anything in life, and I'm not doing all this woo-woo stuff, but doing anything in life is all about believing it is possible and that you deserve it, and also having that sense of what you're going to feel like when you've got it, right? Now, this is not all to say that your whole focusing life is to become a millionaire or multimillionaire or a billionaire or whatever it is. This is really just to say, look, if you like the idea of having £1 million or more pounds, or having a net worth of £1 million or more, then you've got to first of all really feel it emotionally. So we got some. Oh yes, Daisy, my daughter, she's got 2 smiles. Oh no, is it 2 smiles? Yeah, good stuff. We got some. We got a half smile there, tennis to tennis, and well done. Yeah, let's have a look here. Yeah, well, I'm just interested because here's the thing: when I do this live, when I go on do keynotes and ask people how they'd feel if they won a lot of money, you get a sort of range of emotions from really, really excited to really, really kind of frightened. So money, what I really want to say is money isn't going to take away your problems. It's not going to make you happy if you can't get happy before that. But here's the thing, what money does do, and we all know that, money helps you have options. It helps you buy more time. You can outsource stuff, or you don't have to do stuff. And as you know, my favourite big thing is making paid work optional. You work because you want to, not because you have to. And who doesn't want to make paid work optional? Give me a thumbs up if you're interested in making paid work optional. Just see if you're all still awake here. Make sure you're all awake. So, we've imagined we've won the lottery. We've got this 10 million quid. Some of us are frightened. Some of us excited. Some of us are probably ambivalent. Some are in between. But most people believe money will make their life better. So this is not to say that it's going to necessarily make you really happy or fix relationship problems or make you go to the gym or look after yourself. But that's right, absolutely agree. Financial freedom, you've got to sort your mindset out. So the point here, though, you've got to believe that you're entitled to it, or not entitled, you're worthy of it, that you really want it, and then it is going to at least augment your life. I think the thing was, it doesn't solve your problems, but it at least enables you to arrive there in style. But money won't fix your problems if they're deep-seated and there's stuff that you've got to work on yourself. Okay. Yes, I'm going to say this on my story, don't worry, and it's also going to be on YouTube afterwards. So here's the thing. Now let's just talk about what we mean by being worth £1 million. You take everything you own minus everything you owe, and that is your net worth. So if you've got £1 million house, let's imagine, and you've got a £900,000 mortgage, your net worth is £100,000. If you have 30 grand in the bank and 20 grand of credit cards and overdraft, your net worth is 10. If you've got a car and the finance is 8,000 and the car's worth 9, you've got £1,000 net worth of the car. So it's really important to get a sense of that, of what you're actually worth by taking off what you owe. Yeah, let's just say hello to a few people here. We've got a few people joining. Good. All right, so we talked about, I mentioned this thing about having the mindset, and financial freedom, one of the followers here has just mentioned that. You've got two types of mindset when it comes to wealth. Either got the abundance mindset, or you've got what we call a scarcity mindset, or you may be somewhere in between. And I certainly in my life have gone from one to the other at different times in my life, depending on what's going on. And often when you're fearful, or when you feel overwhelmed, or when you don't feel good about yourself, or you've had a lot of knocks in life, or disappointments, or you're just not taking care of your physical or mental well-being, it's very easy to start seeing the world as scarce, that there's only so much to go round and that all the horrible rich people are going to take it all and there's not enough for me and I don't deserve it. You've got to, I'm sorry, but you just got to try and get over that, because there is abundance out there. I'm not saying the system is fair. I'm not saying it's equal and everything. It just means sometimes you've got to work a bit harder or be duck and dive a bit. But money wants to hang out with people who respect it, but who are not obsessed by it. So it took me years to learn to respect money, but I am not obsessed by it. You will find influencers out there and people who can talk to you about this, who are far, far wealthier than me and who've got far higher income than me. But I don't believe you'll find anyone who feels as comfortable in their own skin as me when it comes to talking and acting and speaking and using money, okay? I'm quite comfortable where I am. There will be more ambitious people who want to build multi-billion pound corporations. I've just come off of a thing with Clubhouse, which is a new app. Check it out if you can. It's invitation only at the moment. And I've just been listening to some of the rooms there, and you hear of people who are building multi-billion pound businesses and making £1 million a year. Don't feel embarrassed or overwhelmed by those people. That's great for them. I'm not interested. I just want to make sure I have enough, and that's what this is all about. So when we talk about abundance versus scarcity, there's also another way of thinking. Either you consume money on your lifestyle, okay, or you invest it in stuff. It's as simple as that. They're the two choices you've got. Assuming you can make money and bring money in, whether that's through working for someone or running a business or doing a side hustle or whatever it is, that's it. You've got that thing. And when I was very young, it was all about consumption. I never thought about investing in myself. Well, I did invest in myself and I did get qualifications and I did build a business, but I could have done more of that. And if I'd done more of it, I'd got there quicker. So another thing to be really wary of when we're thinking about building our first million is to be wary of falling into what we call the deserved mentality or the victim mentality. Either that you don't deserve it, or this deserved mentality is that when you've had a tough week or things haven't gone right, it's so easy to make yourself feel better through spending. And that spending is, if you're spending it on consumption and stuff that's papering over the gaps, then it's not going to help you get ahead. And it's something you have to learn, and I had to learn the hard way on that one. So let's talk about getting this first million together, either really, really fast or really, really slow. So give us a thought as to what you think is the fastest way that someone could get £1 million together without breaking the law. So give me some suggestions. Just want to see if we've got anyone awake there, just to see what your thoughts are. Because, of course, what's the most recent one we've all heard? Crypto. Crypto's the answer, right? Who needs to work when you can make 300% on crypto? That's the answer. So go and get the biggest loan you can, chuck it all on crypto, and you're away. Now, would anyone do that? Well, some people would. I get all sorts of people who I've never heard of before telling me that the answer to all my problems is to invest in some trading system or crypto system or this coin or that coin or this system or this trading platform. Look, if it's so great, why are they telling us? If it's so great, why are they telling us to invest in this amazing system or this amazing asset class? Why don't they just load their boots up and go and get it? Because here's the thing about speculating. Speculating is the idea of investing your money with a very high chance that it's all going to disappear, and a very high chance in return for a really tiny chance that you might make a lot of money. Okay, so speculating is a bit of a wild card. And if you want to have a look at a 4 or 5 minute video that explains the difference between saving, investing, and speculating, go to my website, jason-butler.com. or go to my YouTube channel, Jason Butler Financial Wellbeing. I've got a video on there where I explain it to you in less than 5 minutes, the difference. I'm not saying don't ever speculate in your life. I'm just saying you have to be in the right zone to speculate, and you have to get your ducks in a row. And here's an interesting thing about making money really quickly, even if it's on businesses, or even if it's on property development, or even if it's on, you did some gambling, and I don't advocate any of that, is that as quick as it comes, it can go even quicker. And again, I was listening to this Clubhouse, and there were several entrepreneurs on there who said that they built businesses of millions, and they lost them all. They lost the money very short order, because what happens is if money comes to you really quick, you start believing you're really smart and you can't do any wrong, and then you get more confident, you start doing more and more stuff, and you believe that actually you're smarter than you are, rather than you were just lucky. And a lot of people who build wealth are lucky, but my point is that they create the conditions for them to be luckier than other people. They take opportunities as they are. They do the right things on a day-to-day basis. So let's now talk about getting rich slowly, okay? When I say getting rich, building that £1 million slowly. So how do we do it? Well, let's talk about building that £1 million. Now, this is £1 million in today's money, all right, over the long run. So let's think about how much you'd actually have to save. So £450 per month, which is 15% of £36,000 per annum, all right? So think about that. By the way, if you've got questions, you want to ask me a question, chuck it in the comments box, and I'll get to it once we get through the bulk of this stuff, right? I love your questions. There are no silly questions when it comes to money, life, and business. Just chuck them in there, and I'll try and do my best. There are no silly questions. This is your chance, right? I'm 51 years of age. I've been around a long time. I've seen stuff. I've been through cycles. I've made every mistake you can imagine, and I've still come through the other side. And that's one other thing I was going to say, is that what I'm sharing with you is I'm not hoping to get rich. I'm not hoping to get $1 million. I'm not hoping to be debt free. I am. And I'm not saying that to brag. I'm not saying that to make you feel bad. I'm saying I'm the real deal. I was a loser in my 20s. And I honestly, you cannot have made more mistakes than me. And I didn't win the lottery, and I didn't inherit any money. But I had to pull myself together. But I'd have done it a lot quicker if you listen to what I'm saying now. So I say, I've done this. This is not something I'm hoping to do. I've done it. Don't get me wrong, there are people with more than me, who earn more than me, have got more wealth than me. I'm not interested in them. So £450 a month, which is 15% of £36,000. That goes up every year in line with inflation, which we're going to assume is 2%. We're going to hopefully get 5.5% per annum after inflation return and after costs, over 40 years. So we're going to do that for 40 years. Now, that turns into £1 million in today's money. £1 million in today's money. So that's I wonder if that surprises you. Does that surprise anyone there? Anyone think that's never going to happen? Now look, there's loads of ifs, right? Will we get 5.5% return? Will you be able to make uninterrupted contributions? What will inflation be? 40 years is a long time. Will we still have currencies? Look, there's loads of stuff that can go wrong. We don't know. But what I would say is if you look at the annualised return that has been achieved over the last 120 years, the world stock market has, I just looked it up this morning, to the end of 2019, it had delivered 5.2% real return. That compares to 2% real return for bonds, and that compares to 0.8% for cash. And over the last decade, which was particularly high, global equities, delivered an annualised real return of 7.6. Now that's quite high, so I wouldn't agree that that's going to happen. I'm going to come back to. Please keep putting the questions in. I'm going to come back to them. Absolutely, don't just keep putting them in. So look, we don't know what the future holds. We don't know what returns are going to be, and that's why the returns from equities, for instance, which is a part of owning world-class companies, and part of their goods and services and the profits they make, we don't know. But what we do know is over the long run, it has delivered. It has delivered, and it gives you compensation. So let's just go over those numbers again. £450 a month, which is 15% of 36 grand. Increasing in line with inflation is soon to be 2%. If we get 5.5% over inflation, we do that for 40 years, we have our £1 million. Not that complicated, is it? But we want to make it really complicated. What we want to do is assume that we've got to have some massive payoff. We've got to take massive risks. We don't. So my angle here is to look at that approach. That 15% of 36 grand over 40 years will get you $1 million. So the one way I want you to think about your million is that is your fallback plan. Okay, that's your fallback plan, and everything else you do on top of that, whether that's saving more towards long term through an equity index fund, or whether that's paying off your mortgage, I'm going to come back to that in a minute, whether that's starting a business, whether that's investing in something a little bit speculative, whether that's backing your friend's business, whether that is buying crypto, whether it is trading stocks. I'm not saying do those, I'm saying they are on the top. All right, so let's just talk now about repaying the mortgage, right? As a same way of building wealth. So I sit in this house here. I live in a house of an acre of ground. I'm in Suffolk. We've lived here for 22 years. We have no mortgage on it. But when we bought it, it was a bit of a push, right? Cost us quite a lot of money. Well, for us then. But over the years, what I did was I kept on overpaying the mortgage, kept on and on, adding more and more off of the mortgage. And no one saw it. I couldn't wear it anywhere. No one could see it. But it was the same. It was a risk-free, tax-free return equal to what I wasn't paying in interest. So let's now take a little example. If you've got a £250,000 mortgage, which typically normal people do over 25 years, and say you pay 3% interest, you might be paying a bit more or a bit less. If you just overpay £200 per month, then you're going to repay that in under 5 years, 4 years, 11 months. You're going to pay that, and you're going to save 23,000 quid of interest. Now, here's the thing. Part of my net worth is sitting in this house. It's not the only property I own, but it's sitting in this house. If I needed to sell this house or I need to downsize it, I could. I don't need to live in a 4 or 5 bedroom house, do I? I mean, well, I do, but I mean, I like living here. But the point is, I don't have to. If I needed to move into a bungalow, I could turn it into cash, couldn't I? Got people queuing up to buy it because it's a nice place. But the point is that when you overpay a mortgage or when you buy your own home, it is a form of wealth creation, and you can't assume it's going to go up at the rates it has in the past. But even if the property price kept its value relative to inflation and nothing else, just went up with inflation, normal price inflation, and you were overpaying the mortgage and getting rid of that little thing as quick as you can, then you're building wealth. You're still building wealth. But what you don't want to be doing is keep putting on mortgages and putting on debts against your house, because that's reducing your net worth. Don't be taking a mortgage and then repaying off other debt and thinking you've got repaid the debt. You haven't. You've increased the debt on your house. You've got to get rid of non-mortgage debt. So paying off your mortgage, just like investing into a global equity index fund, is a risk-free, tax-free return. So let's think about it. 3%. That's the same as what's that? That's the same as 3.6% for a basic rate taxpayer. And same as 5% for a 40% taxpayer, risk-free, tax-free. What's not to like? And when it compounds over the long run, that's worth having, isn't it, right? So one of the things about becoming debt-free and also paying off your mortgage, that's an emotional return. That allows you to take higher risks. So one of the reasons I can back innovative startup businesses is because I don't have any debt. And because I have other wealth, and because I've got savings, and I have more income coming and going out. So the point is once you get the basics right, everything else becomes easier. So here's the big message here. Get the foundations right. Make sure you've got that emergency fund. Get yourself debt-free, in other words, non-mortgage debt-free. Keep your expenses low, right? And that then frees you up to do the basics of the 15% into a global equity index fund. Now, I'm not giving advice here. I don't know what your personal circumstances are. Go to my website, download the money milestones, jason-butler.com. Send me a DM or send me an inquiries at jason-butler.com. Whatever you want. I can't give personal advice, but I can only tell you what I would do in my scenario. Once you've got those basic things done and automate it all, so you don't have to think about it, then you can start thinking about other things. Okay, so what other things could you do? Well, you could do property. Yes, you could buy property. Lots of people do property, whether that's letting properties out for other people, whether that is buying a property in syndication with other people, friends or relatives. You can also borrow to augment property investing. So if you go and borrow 70, 80% of a property value that you're going to let out or you're going to do development on, it's not all your money, is it? Now, I don't advocate that, because the problem is, although borrowing amplifies gains, it also amplifies losses, okay? So something to be aware of. I'm not an advocate of using debt to buy property. Now, people like Rob Moore, who's a very successful, far richer person than me, he does advocate doing that through his progressive property courses and stuff. They do advocate using debt. I don't, okay? Because I want peace in my life. I never want anyone knocking on the door taking my stuff off me. And if you want a real story, a friend of mine, he was renting out a property he owned down in Felixstowe, which is about 15 miles from here. He was renting it out to a lady for 2 years, good as gold. She basically needed, he needed to get her out of the property because he wanted to move back into it himself. He gave her notice, she stopped paying the rent. And the reason she stopped paying the rent is so that she could be made homeless by him after he took her through the courts to get her out, right? So that she could then get social housing. He never got any rent for 9 months. That cost him something like £10,000 of his own money. He's never going to get back. So property is a good investment. It can make you very good returns. But when you add borrowing into it, and if your tenant doesn't pay or the dilapidations, you've got to start putting things right. It's not a risk-free business. So it's something you've got to think very carefully about. It can make you a lot of money. But start with your own home first. Buy a place that you really, really like and try and overpay that mortgage and get rid of it. But as I say, real estate is great, property is great, but do it slowly. Do it in syndication with other people. Do it where you're not using borrowing, okay? Share the upsides so you don't have much downside, so you also share the pain. Always good to do property with other people if you can, people you can trust, people that know what they're doing, possibly know a bit more. There's always people out there who really know about property, and what happens is they run out of money. Okay, so that's your opportunity. If you're really interested in this, find someone smarter than you who knows more about it. And if you've got 10 or 15 or 20 or 30,000 quid and 2 or 3 others can, find someone who can be that kind of find the deals for you and stuff. Building a business. I've made money by building a business, starting a business, building a business and selling a business. Yes, you can make a lot of money doing that. But here's the thing, most businesses don't make a lot of money. Most businesses aren't that successful. Most businesses are really just a job in disguise. And what you do is you end up working harder to feed everyone else and you don't get paid yourself. I've been there, right? So a business is not always cracked up to be. So yes, if you've got a great idea, wonderful. Make sure it's funded. Make sure, possibly you might need to go and work with someone and perhaps take some options, some share options. One of my neighbours here, he is a multi-millionaire, not because he's the smartest guy in the world. He happened to go and work for a company who couldn't quite pay him the market rate, and they said, well, we'll give you some share options. So he's still got a fair salary. Wasn't really what he was used to. I think he got something like 70,000 and he was used to 100 and he took 70. It was a bit of a pay cut, but he could get by. And he took the share options because he believed in it, and that business got sold and he got a couple of million quid out of it. I mean, if you met this guy, you wouldn't think he was like what I call Einstein, but he took a chance and he thought, okay, I'm prepared to take slower salary for share options. I do this all the time. I've done this with consulting and I've done this with other roles that I've taken. I have taken share options and I'm prepared to take a lower salary. But it's not for everyone. So that's just touch on speculating. Speculating is the thing which you can make a killing on, but also you can be killed by. So I don't advocate that at all. And here's another thing to think about. There's a brilliant writer and entrepreneur called Kevin Kelly, and I write about him in my new book, which is coming out this year, The Money Miracle. I just want to read this to you because it's such a good one. He said, when you're young, spend at least 6 months to 1 year living as poor as you can, own as little as you possibly can, eat beans and rice in a tiny room or tent to experience what your worst lifestyle might be. And that way, any time you have to risk something in the future, you won't be afraid of the worst case scenario. Now that's really powerful, isn't it? If this is one of the problems, and Buddhism teaches us this, is that we're all attached to things, and we put attachments to things because we're really frightened of pain. Actually, if you just go there and get to the real basics, a real basic lifestyle, then you know that that's the worst it can be. You can actually then start doing all the things you need to do, and then you can start taking risks. But going back to what I said, get the basics right, start investing 15% into a global equity index fund. Once you've got an emergency fund, you've got rid of your debt, you've got control. Keep a frugal lifestyle, because here's the thing, once you've got that base, once you've got the habit, once you've got the structure, then when all this money starts coming in, you probably won't want to spend it. And if you do, great. I know someone who never had anything nice for years and years and years. And then finally, he bought himself a Mercedes SL, 500 SL. Always wanted one. And that's the only thing he's ever bought. That's it. That's all he ever wanted. And yet he could buy many of them. And that's the other thing, is that what you think you will do with money and how you would change your life is often going to be different to what you think it's going to be. So just thinking about mindset again, just want to touch on this, is optimism is great. But misplaced optimism is delusional. And there's a great study which came out a few years ago, again I write about this in my book, where they actually worked out the best mental state for getting ahead in life, whether that's money, health, well-being, was to embrace what they call a hybrid approach. And this is called being a realistic optimist. So you're someone who maintains a positive outlook of what can be done, a can-do attitude, how do I do this, rather than I can't. But what you also do is you pay attention to downsides. So if there's one thing you get out of today, apart from, get rich slowly, do the things I've said, get the basics right, and have an optimistic outlook, but also always be looking at what's the worst that can happen. And this is particularly bad for guys. Guys are particularly myopic in that they don't always look at the downside. Women more often than not all women, but women more often than not, will be looking at the downside as opposed to the upside. Not always, and it can be completely different, but as a generalization, as a kind of how the two sexes can be different. So here's the thing: if you can be, look, what could happen and where I do want to go and what I would be like, what would my life be like with 1 million, 2 million, 5 million, 10 million? How would I change it? Because that question, once you start asking yourself the question, you start working out what a good life is. And then you work out how money can be your servant, not your master. And that's really important. Let me tell you now, if we got the premium bonds, every year, every month we have a laugh. If we won 1 million on that, my life would not change. And I know it's easy for me to say, because I'm in that situation now where I've got a few million. But the point here is that it's not going to buy me any much more happiness, is it? Another £1 million. I mean, it's nice to have, but what we would do is we do some more gifting with it, right? Because we've got enough. But there are other people who've got 10 times more than I've got, and they still want more. And that's fine if that helps them get through life and get where they want to go, because we're all different. So it's all relative. But here's the thing. When I had no money in my 20s, even 50 grand would have been welcome. 10 grand would have been welcome. One stage, I didn't even know how we're going to pay the mortgage. So I know what it's like. You have to take that first step, right? And just want to finish with this. You've got to know your why. So if you're going to win with money, and winning means those basics so that you can build the wealth, you've got to work out what it means to you. Is 1 million enough? Or is it just a milestone? Perhaps aiming for 1 million and ended up with 500,000, but having a great load of experiences and wonderful friends. I mean, we know from all the happiness surveys that it's the friendships and the relationships that we build and nurture through our life and the experiences that we have along the way. They're the things that make life worth living. And what I don't want you to do, whether you're going to do this from working for someone and building through savings, or you're going to do that or you're going to build a business or something else or create an invention, make sure that you enjoy the journey, right? Because money is just a measurement. It's just a measurement of how, between earning and consumption. And perhaps not reaching 1 million for you, if you could just get through life having a wonderful set of experiences, having loads of friends, be debt free and have 250,000 quid when you can't or don't want to work, that might be enough for you, right? Because you might live such a simple lifestyle that is rich for you. But in aiming for the 1 million and thinking that that's your fallback plan, you probably aren't going to be living on, you're not going to be living on cat food. And that's really what, I don't want any of you out there to be living in poverty when you're older. It's not an easy thing to do. So there we go. Interesting quote just to finish this up on. No, I'll come back to that in a minute. So let's look at some of these questions then. Let's have a look at some of these questions. Right, let's have a look. I'll take some of the earlier ones first. Let's have a look. Right, so let's have a look at some of the questions. Right. Right. Yeah, that's right. That's a point. A good comment here. Most people don't talk about money, but we got to talk about money because it's up there, isn't it? Would you pay off your mortgage first or try to build and invest in other things early on? So let's just touch on that point because it's a very good question. That if I'm debt free and if I've got an inadequate emergency fund, and I personally, if you're going to do this, you want at least 6 months, and it depends. Assuming you've got a stable income. You don't have to pay off the mortgage before you invest in other things. So I'm assuming here you've got an emergency fund, you've got rid of all your non-mortgage debt, and you're putting 15% aside into a traditional, global equity index fund, perhaps through a workplace pension or a LISA or something like that, a tax-favoured account in the UK, or if you're in the US, an IRA or one of those things. But assuming you've got that going, you don't have to overpay the mortgage to the nth degree, or even at all if you don't want to. If you believe, say for instance, a friend of yours has got a new algorithm for a new super duper digital something, right, that's going to change the world. I mean, I was just asked recently, do I want to invest in a business which unifies people's spreadsheets without them having to change software, and it's a little widget, and it's a great idea. It's not for me because I don't understand that world, but it's a great idea. But say something like that came on and your friend wanted you to invest 20,000 quid in it, or 10 grand, whatever you had. I'm not against you using that as long as your mortgage is not costing you too much out of your take-home pay, right? It's not consuming, and that you've got everything else sorted. It's down to you. It's still speculation because the chances are it won't be successful unless this person's had 4 or 5 successes, in which case, why are they coming to see you? Most people come to you because they don't have the money themselves. So you can do paying down the mortgage and overpaying the mortgage in conjunction with other investing in businesses, whether they're your own or other people's, or a side hustle. It might be you've got something like photography you want to do as a sideline. You need to buy cameras. Nothing wrong with that. So I think it all depends on what the upside is versus what the downside is and your personal circumstances. But here's the thing: get the basics right, which I've just said, and do those things I've just mentioned: the emergency fund, no debt, 15% into the household income into a global equity index fund via something. Then you can actually take the view, okay, my mortgage is not massive, it's not killing me, it's on a fixed rate, I can cope with it, it's going down nicely. I will put some money over here, I will do something over there. But you have to make that decision. But get on stable ground. You can afford to then take that risk. I certainly did. I didn't just pay off the mortgage only. I did that and I did other things. What do you think is the best way to protect yourself given the current financial climate? I take it what you mean there is Ramita Manley. I think what you're saying there is that it depends. If I've got my income is looking a bit dodgy, okay. So say my job is in a sector that's looking a bit dicey, or I've been furloughed, or I'm, it's the hours have been cut, or I'm not sure I'm going to get the variable income, then I would start to build up more cash. So if I held 1 month, if I had 1 month expenses, I'd get that to 3. If it's 3, I'd get it to 6. Personally, I like to hold 12 months of core living costs, okay? It's now at the moment, I think physical cash, pure cash in an account I can touch on is about 10 months. So I need to get a couple more months. Give me a month or so, I'll do that. So if I were you and my income's looking dodgy, I'd get more defensive and build my cash reserves up, because what's the worst that can happen? You can release them and crack on. If my income is still looking okay, but I'm a bit worried the job could change in the future, and I'm just worried about not being relevant or not getting pay rises, then I think what I would do is I'd be looking to invest in my own skills, right? What can you do to improve yourself? Is there a particular thing that you're good at? I know lots of HR managers, and some of them are doing stuff on the side about performance management and helping people do evaluations and doing assessments and stuff in their spare time when they can earn money from that. So I'd be looking to perhaps augment my income. Or is it, if you're in a stable job and you're just thinking, I'm worried about my investments, if you've got 30 odd years before you're going to be drawing the money down, don't worry about what's going on. I mean, yes, I've got a lot of money invested, okay? And sometimes it goes up in an eye-watering amount. I mean, literally gut-wrenching. But that's the price you have to pay, what we call volatility, for longer-term returns. And if there is a crash, there will be a crash sometime in the next 2 to 5 years. I'm sure of it, because that's what happens all the time. Like we had last March, when the world woke up and thought, it happens. I've got a big slug of index-linked gilts, which are government securities that go up with inflation, but they sometimes drop 10% in a week. So here's the point. If you don't need to touch the money, and it's many, many years between now and then, I would keep on investing every month, every year, whatever you do, and just keep focusing on, as long as you've got a cash reserve, as long as you've got no debt, that's what I'd be focusing on doing. But it's also a great time to start a business or start a side hustle or do something else, because there's lots of opportunities. In tough times, opportunities become easier. And here's the thing, it's easy to be employed, or it's easy to run a business when the world is full of hope and everything's going right. This is your time to learn, like I did years ago, learning to fly in tough crosswinds. And I learned to fly a light aircraft in really tough wind conditions. And so therefore, when it was actually an easy day, I could land no problem, because I'd learned in tough conditions. This is your time. What's this one here? Just bought my first house. Would you focus on paying off the debt in full early, or if in a position to buy another house, to do it up? And would you advise that? I'm a self-employed tradesman. Interesting one. I think I know who this is. Yeah. If you're a self-employed tradesman who can do a lot of the work, then there's a lot to be said for buying another property. Okay. and not using your available cash to pay your own home down. There's a lot to be said for that, but it comes with risks. From my mind, it all depends. If your mortgage is very, very small and it's really manageable, because you're not going to not pay the mortgage, are you? Because you still got your job as a tradesperson. I'm not keen on people using leverage to buy rental properties. And the reason is if you cannot afford to buy that rental property with your own money, all of your own money, or in syndication with friends or relatives or acquaintances, then it's going to be you're much more exposed to the rental market. You get people in the rental market. You get people in to rent, but then can you get rid of them? A friend of mine is a letting agent, said that it's a nightmare. You can't get rid of people for months and months, even if they're well deserving, but you still got to pay the mortgage. So I would say it depends on your own situation. I personally wouldn't recommend that you borrow to do property. If it's a flip and you're going to put all your own money into this property, do it up and then sell it quickly, and there's a big uplift, then I'm sanguine about you using all your cash, but what I'm not keen on you doing is borrowing. That's fine. Let's have a look here. I've answered the above question. Yes, it is recorded. It's going to be on the YouTube channel, yeah. What is your view on maximising ISA and contributing to the pension while taking advantage of the company matching? Right, my view is if you are in a workplace pension, you need to do the maximum contribution. And this is assuming you're stable, you've got a roof over your head, you've got your emergency fund, you're not swimming in debt and stuff. Then assuming that's correct and you're stable, do the maximum you can do into the workplace pension that you have to do to get the company's matching. But bearing in mind that I recommend you put 15% aside, right, into probably your workplace pension is the right place. Not for everyone, not for all of it. You might be using ISAs, but you should definitely be doing the maximum. So I did 3 webinars last week. One company will put up to 10% in if you put in up to 6%. So that makes made sense. Only 1% more. Another company would put up to 10% in. Yeah, that's right, 10% in if you put 7% in. So again, no brainer. Do the maximum to get that free extra money. Because otherwise, if you only do the minimum, then you're only going to get the minimum from the company. The company, you have to put 5% in, and they have to put in 3 by law. So if they're going to put in any more, that's a no-brainer. But don't take that off of your 15% figure. You must always do 15%. So assuming you've done that, then I'd be looking to, okay, do I qualify for a lifetime ISA? Am I under 40? Am I a basic rate taxpayer? And may I want to use the money to buy a house? So I would be looking to use a lifetime ISA once I've done the maximum I need to do to a workplace pension. The thing about a lifetime ISA is it may not be good for you to do if you are going to be using it, say, in 15 years' time. Because if you take it out and you don't use it to buy a house deposit for your first home and you've never owned a house before, but if you don't use it for that, then you'll get a penalty if you take it before age 60. And if you're over 40 or you've owned a house before or you're never going to use it to buy a house, then a normal ISA, you're not going to pay any tax anyway, even if you bought the stuff in a taxable account. So you might as well. It's just a tax favoured account. Let's have a look here. What else we got? Perfect. Thanks for explaining. Good. Okay. So look, I want to leave you before you go. So we know that we can build £1 million by doing the very basics right. We have to get our foundations right so that we are freed up to that. We must avoid payments at all cost. Even if your car or your van is blown up, you don't buy another one on payments. Okay. You find a way. What can you afford? And you've got to make sure that you are focusing on your strengths, not your weaknesses. So I want to leave you with this quote. The real measure of your wealth is how much you'd be worth if you lost all your money. That is from an author unknown, but I think that says it all. You're rich already. Money is merely the measurement. It's merely a unit of exchange. It's there. Get rich slowly, and then you can live life like no one else. Thanks for being on, everyone. See you next time.